Republican tax plan cuts middle class and corporate taxes, leaves retirement savings safe. House Republicans unveiled their bill to overhaul the U.S. tax code Thursday morning. Here are the highlights. The House bill reportedly will permanently and immediately cut the corporate tax rate from 35% to 20%. Lawmakers dropped earlier plans to phase in the tax cut over a number of years or have the cut sunset in the future. Both measures aimed at reducing on paper at least their impact on long-term budget deficits. The pass-through rate will be 25%, a huge cut for many small businesses organized as sole-proprietorships and partnerships. As first reported by Breitbart in August, the bill will impose a one-time tax on corporate profits that have been accumulated and held abroad. By taxing these profits at 12% on a one-time basis, the bill eliminates the incentive for corporations to continue to avoid repatriating the funds and investigating them in America or distributing them to shareholders. Illiquid corporate assets will be taxed at a lower rate of 5%. The risky plan to change the way Americans save for retirement and possibly raise taxes on middle-income Americans have been dropped. The bill will not change 401ks, according to talking points distributed by the House GOP leadership. The bill is named the Tax Cuts and Jobs Act, breaking the recent Washington precedent of giving bills titles with acronyms that indicate the goals of the legislation. The bill cuts the current 7 individual tax brackets down to 4, 12%, 25%, 35%, and 39.6%. Originally, the GOP framework planned to drop the 39.6% rate. It was preserved in an effort to prevent tax burden from shifting to lower-income taxpayers. A big question has been where the new brackets would break. Now we know. For individuals, the 25% rate starts at $45,000, the 35% rate at $200,000, and the 39.6% rate at $500,000. For married couples filing together, the 25% rate will start at $90,000, the 35% rate will be at $260,000, and the 39.6% rate will be at $1 million. Standard deduction rises to $12,000 from $6,350 for individuals and from $12,700 to $24,000 for married couples. The House bill expands the child tax credit from $1,000 to $1,600, which is a smaller expansion than conservative lawmakers in the Senate had pushed for. The threshold for the death tax will double from its current $5.6 million per person and $11.2 million per married couple. It would be ended altogether in 2024. Corporate interest deductions get capped at 30% of earnings before interest, taxes, depreciation, and amortization. Small businesses and real estate firms, which are often highly leveraged, are exempt from the cap.